14th. What a week it's been so far. We started off a bit shaky. We recovered. Right now it looks insanely strong. We've had recession fears. We talked about that last week. These recession fears seem to be disappearing on one day, then suddenly completely reappearing, and Goldman Sachs coming out with a new kind of, I don't know, what is it, 41 prediction now that we're going to go into a recession. We have Kamala taking over and being the favorite, and Trump taking over being the favorite, Trump having an X space with Elon. We're going to be discussing all those things. Fabio, how are you doing, sir? How is the week? Give us the high-level bird's-eye view, and then we're going to dive in. How are you doing, sir?
Okay, Jim.
Jim.
I think you did a very good summary. I think the talk of the town currently is definitely Elon Musk and Trump going on an X space, breaking some records there.
And what was the news? It was like 1 billion viewers of all the platforms or something, right?
Yeah, I think consolidated what Elon shared 1 billion views, which is pretty crazy. I missed it because it was during European night, and I listened to it the next day. And when I opened the space, it was already.
Did you listen to the whole thing, or did you? Wow. Okay.
Yeah.
I struggle. I mean, I really did the Trump talk at Bitcoin, Bitcoin Nashville, and I was like, oh yeah, that's why I'm like. I really understand why so many people don't like Trump, but like his policies are just spot on. And here, when he was rambling with Elon, and I was really like, man, let Elon talk. Like, especially at the beginning, Elon wanted to jump in. I was really struggling.
It's tough to listen to. Like, I would say Trump's biggest downside is probably the way he talks and the phrases or the words that he uses, because he's really just an unscripted kind of rambling guy. And I guess with a lot of people, it's somewhat resonating. I even watched, there is a super interesting video analysis on YouTube. There is a guy called Nerdwriter that does high-level analysis of art and of psychology. Yeah, Nerdwriter 1 on YouTube. And he analyzed the way that Trump speaks and why it resonates so much with a lot of people. And, there is this saying, or a lot of people say that Trump...
Wow, 3 million subscribers.
Yeah. He's really good. Like, this guy is one of my favorite YouTube channels. It's one of the few ones where I have my...
It's the first time I ever hear about this. Okay. And when is this Trump video on there? Because I'm going through the YouTube channel. It doesn't... Is this an older one, or?
Yeah. It's when he's during his first presidency, I think. So it's probably 5, 6, 7 years old or something like that. And like, he really analyzes his speech pattern and why it works so well with so many people. Because, like, in the 21st century that we are in, a lot of people, they don't have a strong attention span, and they just focus on a few catchphrases, and basically they hear what they want to hear. And he's really good with reiterating and putting in certain words and repeating them over and over again, and also how he answers questions. It's I don't know, some say it's genius, some say it's dumb, but yeah. And
do you think that's natural for him? Do you think he does this intentionally, or is this really him?
So I would say a bit of a combination, because he definitely has a lot of sales training. Like, he's a sales guy. When you look at his past and the deal maker, and, like, he's a salesperson. And as a salesperson, you get trained in a certain way on, how you answer and how you use words. And I think there is a combination of the two, but he's kind of adapted it in a very natural way. So yeah, but 2 hours of Trump speaking is heavy to get through. Like, it's not I don't know, and how can I put this? Yeah, it's a lot of rambling, a lot of repetition, and I would say if you heard him speak for an hour, you probably know how most of his speeches go, because he's basically repeating the same things over and over again. The only thing that I would disagree is the coverage that came out of this whole thing from the mainstream media. Like, it's a bit sad to me. And, like, you could
sad probably, I would say expected.
I mean, I haven't seen a single newspaper that came out and said, "Hey, this was a record-breaking thing," and I mean, 18 million or 20 million or even a billion listens right now. Nobody's talking about that. They're talking about everything that you could spin it even a little bit negative, and yeah, it's misrepresented a lot. Yeah, that would probably be my 2 cents. How much of it did you listen to?
Really nothing. I at the end actually listened to the highlights that people kind of tweeted, when they had like these 2 minute sound bites. I know this can be very dangerous with Trump because in this case it was very constructive and positive, but I mean most of the times, right, when you have these sound bites, yeah, very easy to kind of misconstrue the things. But it was just more on, yeah, those kind of sound bites. And um I do actually think if you actually remove Trump as a name and you just read those summaries of someone, right? And I think James Altucher had this really nice kind of thread on Twitter. If you know him, very like quite good investor and does a lot of writing and so on. And he kind of said, remove the name and just look at the kind of points and policies that were discussed, right? And he said at the end, he said, like, I'm like, don't get me wrong, but this makes so much sense, and I agree with that, right? So, um, yeah, I really think people have a lot of Trump derangement syndrome. And I look, if I listen to him, I get where people come from. I really do. Yeah, even me, I really can't listen. I just have to be like, dude, like, can you just let Elon talk? Like, I think Elon has a really good point here. Like, let the other side talk or something. But if you then look at the points that were discussed, and I obviously didn't fact check that, but I don't have any doubt on why these or how these points got discussed. I don't know. It just makes so much sense. I just sit there and say, yeah, I not even 90% agree with this. I 100% agree with this, right? And I think that's I don't know. I think that's at the end the shocking part. Like, look, I can't vote for Trump. I'm not an American citizen. If I were an American citizen, I don't know if I would vote for Trump. But the policies, and I am not endorsing Trump or anything, right? I'm just saying the policies that they discussed on the space, they make a lot of sense to me. And yeah, they kind of, I don't know, speak out of my heart. So that's a bit of the kind of my side. Are there highlights or anything that stuck out for you that really kind of that you remember, or things that were discussed? One thing that I kind of noticed that everyone talked about, what wasn't talked about was crypto. A lot of people were kind of disappointed about this. I personally completely understand that, but I get it. I mean, people obviously wanted to have the crypto part, but yeah, that was a bit of what stuck out to me, because it wasn't discussed. But are things that I don't know were discussed that you feel are interesting to kind of mention?
So I guess the maybe the parts that were interesting to me the most were they slightly touched on, let's say, green transition, climate change, EVs. It wasn't that Trump gave a cohesive answer and really, answered the question or went on point with these topics, but he seemed more. He didn't push back on EVs and he didn't push back on climate change as much as he used to probably, and the sound bits regarding nuclear I found this very interesting. The other points, I don't know. Has a pretty straight line in when it comes to policies. One thing that I want to mention is I've actually looked at the Democratic program and the Democratic talking points from 1992.
Oh, I saw
Democratic
that. And
Party.
compare this on the on yeah. Uh-huh.
And it's exactly what Trump's policy is right now. Like he has basically, if you turn back the clock 30 years and you go into 1992, left-leaning politics was what Trump is discussing right now, and it matches one and one. And it's kind of crazy that, like here, 30 years later, that this is considered far right wing. Like I've never considered myself to be right wing or conservative. I always considered myself a moderate and a centrist. But if I talk to friends, if I talk to family, or if I just, and enjoy content online, I kind of get pushed into this right wing thing. But I don't know. It's like the talking points, maybe just to name a few that were in that 1992 program, is basically they're saying we want restoring of basic American values like personal responsibility, individual liberty, tolerance, faith, family, and hard work. Common sense. I mean, very moderate take, I would say. And then they have belief in free enterprise and the power of free market forces. I mean, yeah,
Yeah.
pretty common sense. They want to empower America's communities first. You know, um, with basic law and against crime, and governments don't raise children, people do.
Mm,
I mean, yeah, and things like that are in there, and I don't know. Also, when it comes to domestic policies and everything, like I think it's yeah, politics turned into something very weird the last I don't know 30 years or so. But don't let's not too dive too much into politics, because I think the thing that we agree on both is, and the thing that people of these spaces or streams care about most is what is the impact of the market. And I'm not sure what would be your take on this. Is maybe the let's say he calls it the Kamala crash. Of course, we talked about it last week. What was the actual, let's say, reason, which was probably the Japanese carry trade. But could it also be that the market in general is repricing a Trump win right now? What would be your take on that?
so, okay, maybe a couple of interesting points. So yesterday I had a coffee meeting with a fund manager from one of the largest international funds, really one of the largest. Everyone would know that fund, and he leads the entire Asia market for that. And so we had a coffee catch up, and it was more about personal talk, because he has also kids, but his youngest kid is same age as my oldest kid. He's a bit older than me, and so it was more about personal stuff and so on. And we caught up. And so my first question, and every time we meet, he makes it very clear that he's not allowed to talk about current investment ideas that they're making, obviously, right? And he always makes it very clear that like he doesn't want to do future looking stuff. But he says, like, when we have conversations, I've noticed he's always happy to share and talk about kind of past things. So my question to him was about the yen carry trade, right? And I said, hey, look, I mean, you guys, I mean, if this thing gets traded by one firm, then your name, your firm would always pop up, right? And I wanted to understand this from him. I said, is this something that was on your radar? Because I said, look, very honest, I may have seen this somewhere, but I didn't pay any attention to this until like 10 days ago. And so I just wanted to know, like, the absolute pros in the industry. And I spoke to another friend on that weekend who also is a trader for a fund. And he said he has heard about this thing for the last 9 months, probably, but their firm never traded this. So here's the interesting thing. He said they tried to trade this thing twice. So basically go long the yen, because everyone goes short, right? So everyone is short the yen by borrowing yen, selling it into something else, mostly US dollars, right? So they tried in the past year. They've been monitoring this, he says, down to the hour. So they've been monitoring the yen flows down to the hour over periods of weeks. And he said they got burned twice. They thought that's it, it's going to flip. It didn't. The flows just increased and got strong on the short side. So he said at some point they kind of gave up on this because they said it's impossible. It's like a bit of the big short. At some point this thing is going to flip, but it's impossible to kind of predict. And he said their entire metrics, their entire measurements, and I mean they're state of the art, right? I mean, they have so. I mean, they are the fund. They are so. I mean, they're so well connected in the space. And even he said for them this was such a surprise. Such a surprise. Completely out of a surprise. And they said what was also a surprise was, and I wasn't aware of this until he spoke about this. He said, you know what the craziest part is? The VIX had the strongest intraday move up, but the S&P actually barely moved. So the entire measures that they have always had, where normally you have the VIX completely, the volatility index completely goes out, the S&P didn't move. And so for them, this was like so difficult because a lot of their trades actually delta neutral. So they don't trade on market going up or down, they trade on other things, right? So one of those things is if the VIX goes up, many times the market actually has to move. So these are things that they love to bet on and normally work on. And so he said, this was so difficult for them, right? And then I said, okay, can you walk me through how did that Monday look like for you, right? I really wanted to know. Like he leads a firm, it's like incredible amount of money. Like anyone that is a who and who invests with that firm. Walk me through. What does that day look like, right? And he said, yeah, I mean, basically he was up, I don't know, like as early as it can be, like barely slept basically from Sunday to Monday because they were expecting a lot of drama. he was monitoring the crypto flows, and because he thought that the crypto flows were kind of predicting what's going to happen in the equity markets and bond markets and so on. And he said the calls were just insane. It was insane. He said, like, you cannot imagine the people that called me in Asia. I mean, he's responsible for Asia. It doesn't talk about Europe or North America and so on, where they also would be very dominant. He said, you can't believe who's calling, asking WTF is going on. And so, to me, what the reason I want to tell that story, I don't want to, I'm not a name drop. First of all, I don't want to name drop. And second of all, I want to 100% keep the privacy of such people. But when I listen to this, and then I have these various Twitter accounts, right, who are like, of course I knew about this. And man, this is so easy to trade, right? And oh, you look like I've been telling you for months already. Yeah, sure. I get it. Like, it's so easy to make a tweet, and it's so easy to kind of pull up a tweet from 3 months ago where you made a tweet about this. But who cares? Like, how does this matter, right? If you cross the road, what matters is if you see all the cars coming, or if you miss this one car. And then the other thing is, if you missed the one car, did you cross the road? Yes or no? That's what matters, right? Did you make the bet? Yes or no? If you didn't, then all you're doing is posting on social media. If you made the bet, great. How big was the bet? Is it sizable? Like, did it move the needle or not? And to me, that was just so incredible to hear this from someone who really knows. I mean, he is the person when it comes to macro, and when it comes, like, his direct report is one of the most famous investors there is in this world. And like not his direct, his boss actually. And like, when it's something to listen to and talk to and hear from, and then you get this from someone who really knows this stuff, you sit there and you're like, wow, it's so fascinating to see sometimes how smart people are on Twitter and how they seem to know everything. And then the best investors in this world, they kind of really struggle with this. And so I just wanted to throw this in because I feel sometimes these perspectives are the perspectives that no one else gets, to kind of show how incredibly difficult it is, right? When these things come up that some of these funds have known for a year, have been monitoring, have been actually losing money trying to bet on, and then getting surprised just like everyone else. So I just kind of want to give that a bit. And so now comes the really interesting part. And so the interesting part was, after all the phone calls were made on this Monday and everyone was kind of like, okay, we got stuff under control. No, we didn't get liquidated. No, everything is good. Like, the interesting thing was where I asked, okay, how did you react to all this? And he said, we didn't react. For us, it was adjusting the models, adjusting the calculations. Did anything of that change our beliefs into the various ideas that we had? Is this a fundamental change to everything? And then we didn't react. We prepared, we adjusted. And that was the interesting part, right? Where then he said, like, we were down that Monday, just like the entire market, but we ended the week extremely strong. And so I think this was so interesting to hear because, I don't know, to me, this was so, I mean, I was down, my portfolio was down. I think everyone who was just like crypto long was down. But a lot of people, right, finished the week relatively strong because crypto had this strong recovery. And so for them, it was more like, we finished the week really, really strong. And that was so surprising, where I didn't realize, these really, really, really good investors, it's not that these things don't surprise them, just like it surprises us. It doesn't wipe them out. They have their conviction on their bets, and they don't, at least his entire team doesn't invest in crypto. So not crypto related, but I mean, I think we can just draw these lessons as well. And it's more on they double and triple down on their bets based on these new models that they kind of adjust. And it's not reacting, it's kind of putting it into those new models going forward. And I know, I felt this was such an interesting coffee meeting yesterday. And it really got me thinking all day yesterday, actually, where I was really reflecting on how can I implement that as an investor? What can I learn from that? I don't know. I felt, because it was such a remarkable day on that Monday, right? At least for me, this was really a remarkable, because I mean, that entire weekend, and I mean, I'm heavily invested in Ethereum, and Ethereum got slaughtered that weekend, right? And so for me, it was just really kind of interesting to see. And so now, obviously, looking right now, Ethereum is up actually almost the most of all the coins since that entire event. It's been doing really well, actually. So I don't know. I just thought that was really interesting. At that point, right, and maybe that leads a bit over, we did talk a bit about politics, and without giving away whether he's American or not American, or whether he cares about U.S. politics or not, the conversations we had was, for him, he said he doesn't think it matters at all who's going to become the president for the markets. And I said, yeah, do you think this is just for the equity market, for bond markets, or do you also think for crypto? And he says, look, like he's following crypto just because of a personal interest and just because obviously it matters as part of the portfolio. But he says he doesn't think whether Trump or Kamala wins is going to have much of an impact. And I thought that was, I don't know, very interesting. How do you see that?
So maybe on the yen carry trade, like I read every article that Arthur Hayes pushes out. Not because he's somewhat of an oracle, maybe has good calls, but the style in which he writes is really
Yeah,
resonating with me. I
it
love
is amazing. I mean, it's a bit sarcastic, it's a bit sassy, yachty,
funny.
and yeah, uh-huh.
Yeah, and he's a complete degen. Like he lives and breathes this stuff, and he has a good humor. So I love to read this. And he named the yen, so longing the yen and longing TLT, and basically calling a bottom, longing the yen or longing the
Wow,
TLT. And both of these
what a
assets have
call.
been massively
Yeah,
suppressed, let's say. But he's saying if you try to long the yen or if you try to long TLT, that's a widowmaker trade. It's 1 in 100 million that you will get this right, and the chances of you losing are like 99.9%. There are people a lot better than you, a lot more sophisticated than you. They're trying this every single day and they're failing at this. So don't even bother. That's basically his take on this. And when we take this over into, let's say, a macro strategy, or maybe it's something that's applicable and applicable for the everyday investor. I read a super interesting Substack on, are we going to see a recession, yes or no? And this guy, he makes such an interesting claim that I haven't seen anywhere. And I wouldn't even call it contrarian. And he basically says there's not going to be a recession. The S&P is going to go to 6,000. The S&P is going to go to 7,000, and there's not going to be a recession. And his reasoning is pretty wild. He basically says you have this large majority of people that have learned how to invest from, let's say, the textbooks. They look at discounted cash flows. They look at PE ratios. They look at traditional metrics to assess if a stock is overvalued or not. And currently, the S&P averages like a 20 PE ratio, which would tell you it is massively overvalued. And there is this disconnect between larger indexes, especially the S&P 500, and the economy itself. So last week we talked about that SAM rule indication. For example, the unemployment ticking up, or certain other things. But what's happening since he says 2014 and now is a complete disconnect between the S&P as an index and the underlying economy. And the main reasons he gives is just think or try to comprehend the amount of financial products out there that have automated flows into specifically the S&P 500. Every 2 weeks when salaries come in, retirement products, everybody's piling their money into it because they can feel the debasement, they can feel the inflation, and they want to have a low risk approach. So they basically just pump their money into the S&P 500, and everybody does it. Not just you Americans. The whole world is basically just putting passive flows into the S&P 500. Every sophisticated institutional investor is looking for spreads, 3%, 5%,
mm-hmm.
7%. If they dump, they're going to go in and buy hard. So you don't even get massive corrections anymore because everybody anticipates the corrections. And just the sheer amount of automated flows keeps the S&P up, and it basically just chucks along. And then you have normally the Fed has a big impact in how they raise and lower the rates. But this is not true anymore. Like, there's a complete disconnect from the Fed as well, because what's taking over is fiscal spending, that the government is just pushing 6 trillion a year, making new money, stimulating the economy, pushing GDP up, and it's just going and going and going. And he says, and this is super interesting, we will probably have another 2 years, maybe even 3 years of the S&P just going up. But with all things that go up, eventually there will be a time where we have a 30 PE ratio on all stocks in the S&P 500. And people will take a step back and say, what am I doing? Is this really value, or is this becoming a bubble? But we are not in bubble territory yet. And then we will have an unwind. But he or they say, and they were right about this for a prolonged period of time. He basically made that call in 2014. He says we still have a long while to go. And as you said, it doesn't matter who's becoming president. Both are going to continue the money printing one way or the other, through fiscal spending, through tax breaks, whatever. So we will have a lot more upside on risk assets just because automated flows, fiscal spending, and it doesn't really matter what the Fed is doing. He even says, if you look backwards, every time the Fed cut rates, we had a recession, or almost every time, or we had a little bit of a dump. And they also said this time it's not going to be like that because the Fed doesn't really have an impact. You look at what happened, the fastest rate hiking cycle in history, and we're making new all-time highs. So if they're going to cut, the market sees this more as a signal, and it's probably going to be a bullish event this time. And I think the where this applies to the average investor is a lot of people are actually going to be sidelined just because they expect a recession, a depression, and they look at these standard metrics that don't apply anymore. And that was such an eye-opening moment for me where I said, hey, don't try to anticipate the recession. Don't try to trade this at all. Just, automate your flows and kind of go back. And if we really approach bubble territories, and he said the best way to measure this is look at specs and at new stock creations. Easiest way to spot a bubble, especially in equities, is when you have a large amount of new stocks coming to the market, like we had in 2021. And sorry for the rant here, but that's I think a very refreshing take on, let's say, recession or no recession. I don't know, what would be your first reaction to what I just shared?
Man, very interesting, and I really I really agree that it's actually really really difficult. I mean, of course, it's difficult to predict recessions. Otherwise, all these crash prophets, right? And there's a lot of them in every country, right? I mean, you have them in the US, you have them in Germany, and so on. You have these crash prophets. They are like they have predicted nine of the last two recessions, and so on, right? And then the way this always works is if the prices go up, people are like, yeah, price is going up. And if this one crash happens, they're like, yeah, look, I predicted it. But it's the same thing. Did you actually trade it? Did you actually invest in it? So I mean, look, I fully agree with you. I would say my portfolio is really well diversified still. I own crypto, I own stocks, I own bonds, I own cash, I own commodities, I own precious metals. Gold has been doing really well. I know you love gold a lot. It's been doing really well. And yeah, it's I know that crypto, especially over the last couple of months, has taken a bit of a breather, has been going sideways, has been going like really a bit on the chill side. But yeah, I think we're gonna get through the summer hole. It's gonna go into September, and I think it's super super difficult to kind of, I don't know, make any calls on the recession thing. I mean, one thing I do see right now, right? I think there's one thing, especially the September Fed decision, right? I don't know if you want to talk about that, because to me, I do see the Fed a bit in a pickle here. Because, like, let's talk through the various options. I mean, at the moment, if you look at the futures market, they're predicting with 50% a 0.25% interest rate cut, so one cut down, and the other 50% predicts 0.5% cut down, right? So basically, close to 100% are predicting a cut down. Now, if you think this through from a yen carry trade side, this would actually make the yen carry trade uber difficult, because it makes the dollar weaker and in theory the yen stronger, and that's the exact opposite what you want to have. And from everything that at least I know, there's still a lot of money tangled up in this yen carry trade, so a lot of it would still have to unravel, and this stuff would make this worse. So we may see another Monday that we have seen last week. Then obviously if we cut, let's say 0.5%, the yen carry trade, massive, right? I mean, this would be such a problem. I think if we don't cut 0.5%, there's going to be a lot of people who are super disappointed. And I think it gets worse if we have 0%. So if we have no change. So I do see that pickle a bit in September. So I would love to hear a bit of your thoughts, because I don't want to be in Jay Powell's shoes here, kind of having to probably run a lot of sheets, talk to the central banks, understand what do the flows look like at the moment, how much is still in this yen carry trade if this is so dramatic and dominant, understand all these kind of impacts and factors. How do you see this? I think a very, really, very difficult one. And then obviously you do have the November election, and the September cut is the last cut or potential cut before the election. Jay Powell has several times said he's not politically motivated. Obviously, I have to take that at face value. Don't know, but what else can I do there? I mean, I don't know. Very interesting. Do you think Trump's calling him? Do you think Harris is calling him? Trump's like, hey, no cuts, leave it where it is. And Harris is like, hey, no, cut by 0.5%. I don't know. What do you think?
So I think he's definitely going to cut either 25 or 50 basis points. Oh, and my reasoning for this is he already hinted at this and made it pretty clear before the unwind of the Japanese carry trade. And I think, and look, I'm no expert in this. I'm just listening and reading what others on this topic that I trust have to say on this. And I think the yen carry trade is an obstacle or a thing that is dangerous short term. Like it's leverage, and leverage unwinds very fast and very intense. And so I think we can definitely see another spike in the wicks, another volatility event as we saw a Monday a week ago. Definitely, that's very much on the table. But I think it's not that bad because if you look, most assets actually recovered back to their level within days. And I think something similar is probably going to happen when another unwind is coming, that we see this insane volatility, it dips down and it gets bought up again shortly. But I definitely think they are planning to cut either 25 or 50 basis points. And if it's politically motivated, kind of hard to say. Maybe it is, maybe it's not. But I would say the main reason why he is going to cut is because central bankers in the world, they come together, like they came together, I think, just a few days ago in Basel, and they are taking a harmonious approach to the market. And we already saw other central banks like England, Canada, Switzerland, the ECB cut rates, and it would and if they don't cut, the dollar would get too strong, and they have a problem with debt refinancing and debt rollovers and so on. And if you, the thing that I watch when I kind of would anticipate or make a bet is firstly, of course, the CME, because the market is pricing in something there. But then also just look at the Dixie, the dollar index. If the dollar index shows weakness right now, it's not trending upwards. And I think that the Dixie is probably the best indication. If it's trending upwards, they're probably not going to cut. And if it's trending downwards, it's basically the market pricing in that they are going to cut, and the dollar is probably going to get a bit weaker. So I think, I don't know, I don't really want to speculate about their, let's say, political ties. You know, they say they are not politically motivated and so on. But yeah, I don't know. It's an election year, and I think it's very interesting because I think in the All In podcast, or I'm not sure which podcast as I listen to, is if you want to know who wins the election, you basically need to watch the S&P 500 and the price of oil. So if the S&P is high and basically making new all-time highs, there's a big chance for the Democrats. And if oil is low, it's also like in favor of the Democrats, and the other way around. I found this as an interesting take, but yeah, I think they're going to cut 25 or 50 basis points. Yeah. I don't know. What are your thoughts on the September meeting?
I really think it's difficult. I mean, I do think that probably the 0.25 is going to be the one that is not going to put too much pressure on the carry trade, is going to appease a lot of people, is going to set the right direction. So I do think if Powell just wants to go into some direction, appeases some people, then I think the 0.25 is probably the one that's, yeah.
I maybe want to build on that a little bit, and then just put the crypto lens on. What does it mean for us as, let's say, mainly crypto investors? And I think there is a chance that we're finally going to break this 4-year cycle narrative, because this year might not actually be 4 years, but it's going to be a prolonged cycle that we're going to really push into 2025, maybe even 2026. And see a strong market maybe until let's say 2026.
But can I understand why is the 4 year? I mean, I have been never a big fan of the 4 year cycle, but I still want to understand, why are we breaking the 4 year cycle? Because I thought this year of, let's say, 2024, right, which would be 2020, looking back, wasn't that also a year where we had a bit of a dip during the summer, and only then later in the year we had this run up? If I think back of 2016, we actually had the same thing in 2016, right? So I don't know. I'm just trying to kind of see a bit the reasoning of what would invalidate the cycle.
So if, especially if we see a prolonged cycle, so if we are going to get an all-time high towards the end of the year or in the beginning of 2025, it would be a standard 4-year cycle. But if the high is going to be much more, let's say, delayed into end of 2025, maybe even into 2026, it would kind of break a bit of the 4-year cycle. And I would say maybe two things that I'm currently considering, or trying to wrap my head around is I am under the impression or anticipation, let's say my educated guess is that the cycle top is going to be much later than most people think. A lot of people make their prediction for end of 2024, and it's, in my opinion, it's going to be delayed into late 2025, 2026. And then also, I think the volatility of the downside corrections is going to be much different than previously. So we basically went from 85% corrections to 75%. And my anticipation is that the volatility is going to get even lower, and that the next correction after, let's say, a cycle top and a bursting of the bubble, a retracement, a bear market is probably only going to be 65% or so. Like that the market really matures and grows up, that a longer, more sustainable bull market with less volatility, like what we saw during the last year. Strong and steady run up, not a lot of 30 percenters as we saw in 2017. And then a prolonged version of that, and then at the end of it, a smaller, much more reasonable correction, let's say in the range of 65% and not 75 to 85 as we saw in previous cycles. That would be a bit of the, I don't know. And that would be really difficult for a lot of OG crypto people to kind of wrap their head around, because they are expecting blow off tops or early top in 2024 or early 2025, and they are expecting a major drawdown of maybe another 70 to 80%. So if you don't get both, I guess a lot of people will feel pain in anticipating that everything is as it was. So I think it's going to be very, very interesting what we're going to see towards the end of the year into next year. Yeah.
Okay. Interesting. How do you see the current coins at the moment? I mean, we've actually seen almost a week of outflows now in on the Bitcoin ETF. We've had the first day of no outflows on the Ethereum Trust, or on the Grayscale Trust ETF. So there was some positive sign there. Ethereum has been hammered the most last weekend, right? Over those like Trump trading seemed to be selling off ETH and was massive. Um, Solana has been doing really well before. Now it's been really struggling. Let me just quickly check the prices. I think Solana is down actually over the week. Yeah. Well, actually, all coins are down, up and down, up massively. Solana is actually down over the last 7 days. And people were talking about the DEX volumes on Solana dipping and Ethereum kind of going up. What are your thoughts here a bit? Is there a bit of a shift away from the meme coin craziness on Solana? Is it just a bit of a kind of hunch at the moment? Is it a bit of a whatever? How are the various coins doing? What are the trends at the moment? Or it's just a bit more of a waiting game at the moment?
So what's really interesting is to see that if you just take, let's say, the top 20 coins, and we had most of these, they had their all-time high late 2021. And actually, if you just go down the list, and I don't know, just to name a few, I'm not targeting this specifically to a coin, but if you look at Cardano, Atom, Avalanche, Polkadot, Filecoin, Litecoin, Link, Matic, it doesn't matter what, they are all down average 80 to 85%, some more. All of these altcoins, they are still in a deep, deep bear market, still. And the only assets that really performed were Bitcoin, Solana, BNB, look, Ethereum is in another category because it's only down 50%, while most of these other coins are down 80, 85, some even 90%. So I would say the whole altcoin market is still in a deep bear market, never really seen a bull market. They saw bear market rallies, but they are not in a bull market. And a lot of people are, expecting alt seasons and so on. I don't know if it's going to be a broadband alt season. There might be a shift into much more a narrative-driven market, let's say, for example, Ton is an exception that we saw really performing this year. I would put Solana and BNB into another category because they perform very different than other coins. And what we also saw, especially on Solana, is so 99% of all the meme coins they get made on pump.fun, which is like somewhat of an application. And what's interesting is pump.fun actually doesn't have a token, but they're making millions a day in fees. So the shift that I would maybe say that we saw this time around is that we seen companies coming into the crypto space, not making a token, but having a business model that is applicable and making millions with this kind of, and pump.fun is probably the best example. Is the narrative going to shift? Of course, we will always have narratives. That's how the crypto world works. The question that I ask myself very seriously is, are we going to see a broadband altcoin season like we saw in 2017, like we saw in 2021? And I don't really have a good answer for that. And I also don't want to bet on this. I'm very conservative in my approach. I only bet on blue chips. And, I don't try to trade dollar cost average. But the frustration I think that we see right now in the broader crypto market is that a lot of people were anticipating another alt season, and they are in these coins that are down 85%. So yeah, I don't know what the disconnect is there and why this is happening, or I don't know. Do you have some thoughts on that? Why, let's say, out of the top 100, we only see a handful or two handful of coins really performing, while Bitcoin and other tokens like Solana are almost at an all-time high.
I don't know. Good question. I mean, I'm asking myself the same. I really am. I think it's very unique. I know. I think it's people don't know what to do with the other coins. I think on the Bitcoin Ethereum one, it is the blue chips. I think on Solana, kind of working there with the hopes of getting an ETF, and everything else is just very speculative for them. And I mean, that's, I don't know. At least what I'm thinking. I don't know.
Hmm.
Very, very interesting in this cycle. I really have to say.
So what I would give, like, don't want to allocate any probabilities to that outcome. But if you compare that to previous cycles, let's say 2020 and 2017, 2016, so these two cycles, then normally when Bitcoin hits all-time highs in 2020, this was the case at the end of the year. In 2017, I think it was early 2017, then we really see the start of altcoins that they start to fly. I would still give it a probability. I don't know how high that this is actually going to happen, that we are going to see a run up at the end of Q3, Q4, where Bitcoin really shines, breaks the 74,000, goes into the direction of 100,000, and that we then see Bitcoin dominance finally topping out, retracing a bit, more risk on behavior, and people are flocking into altcoins. I could really see that. But this time, I could also foresee a scenario where that doesn't happen at all, where you really see the fund flow, especially into the blue chips, especially through ETFs, like that people are FOMOing into Bitcoin and into Ethereum specifically, because you have different products as in the ETFs. And yeah, I don't know. I think what might be helpful for the average investor is kind of keep that in mind, that this time could be different and that you don't want to be massively overexposed into high risk alts when you could also hold blue chips. But yeah, it's tough. Like if it would be easy, we would all be rich and making a lot of money. And so
That
yeah,
is true.
it's really
That is true. Yeah.
yeah.
Um. Okay. What I don't know. What other points or what other things do we have? Because these were the main two things that I have. Is there anything else from your side?
Um, I don't know. It's going to be a very interesting time period ahead. I think you might know better than I. When exactly is Token 2049 happening in Singapore? Because that's a major event. I'm expecting major announcements, and it's pretty soon, right?
Yeah, it's end of September because I'm gonna be on holiday just before, and then I'm actually coming back just actually on that time. Yeah.
Yeah, so I think Token 2049 is probably the most, I don't know how to put this. It's one of the biggest crypto events worldwide, I would say. It's happening in Singapore and it's
It is.
happening it is the biggest, or
It definitely is. I mean, it's one of the largest events, and it's quite a solid one. You also have to say, so it's not like one of the really crazy ones. It's actually very solid.
Yeah, so there is this. I think we have pretty in September a lot of things that could ignite a bit of let's say FOMO or a bit of more risk on behavior, and I would put probably the Fed meeting with a potential cut and token 2049 both into a category that is sparking some excitement. And also, if you put seasonality on top of that, Bitcoin has been known to perform really well at the end of Q3 into Q4. So both of these things together, finishing like the election is happening at the beginning of November, and all of this could form somewhat of a perfect storm or ignite a spark that could really send us to new all-time high. So I'm actually bullish. I used to be, I still am, and I think we're going to have. I tweeted this, I think, in May or so, so for the first time. But wake me up when September ends. We talked about this summer hole, this boring period. We kind of had that, some chop, some ups, some downs, but nothing really that puts us into a bear market or into a bull market. And now this time is almost coming to an end. I mean, we're 45 days away from end of September, and let's see. Yeah, I'm super excited what's happening towards the end of the year, and allocate accordingly. I'm still running my DCAs, and yeah, hoping for the best.
No, I mean, very nice. On our side, I mean, a couple of points here. Obviously, we're getting closer to day 80 than day 90. A lot of people ask me what happens after day 90. Very simple. Day 91, day 92, day 100. I mean, we keep going. Don't worry. Cake is not shutting down. So just want to be very clear on this. We're launching constantly new things tomorrow. Really, really exciting. One of the most requested features, we're going to have bank transfers for fiat. So that's going to happen tomorrow. Perfect time for buying crypto. So check out tomorrow. That's going to be, one of the absolute crucial thing. And then another thing that was actually asked a lot is getting cash flow on stable coins again, USDT, USDC. So we're going to launch that tomorrow as well. We already have T-bills. And I know a lot of people say, oh, the 5% that they get on T-bills is not so interesting. I don't know. Like, come on, like very straightforward. So yeah, tomorrow we have that. And then next week we have, maybe just to sneak peek a little bit, we have the entire tax optimization next week. That's something that's also one of the most requested features. So we're very much looking forward to that. And look, we're not going to get everything into those 90 days. Actually, we're really completing everything that we had planned for the 90 days, which is the 90 coins, bundles. I mean, it's insane. Like today, I did the wrap video, kind of like the wrap up video to kind of summarize what happened in those 90 days. And I did that today. And they're going to edit that and customize that and so on. It's going to come out either on day 90 or afterwards. And it was just crazy to see all the amazing stuff we have done so far and what's going to happen in those last 10 days now. So, yeah, just really make sure you're seeing this. Actually, today, I think 11 p.m. Singapore time. So that's 11 minus 6 hours. So that's 5 p.m. in Europe. And then 11 a.m. US time, East Coast. We have the AMA with Open Eden. We have these T-bill tokens. So that's going to be also really cool. So definitely want to check this out. And so, yeah, I just also want to say here, really big thank you to the team of how I've been hustling. Sometimes, and I express this in all my daily videos as well, I'm a bit, I think it's a bit of a pity that the market didn't kind of do us a more favor in those 80 days so far, because I think our results would have been really stunning and outstanding. And so it's more on a kind of turnaround of the momentum. So we definitely have that, and it's a positive. So yeah, want to say thanks to the team and thanks to the community, and let me raffle off the $500 for our weekly winner. If you also want to win next week, then make sure you take part of all the things you have to do. So these are the participants this week. So you see quite a lot. For privacy reasons, we block out the last 2 digits here. So putting everyone into the raffle. Let's go. Okay. It's 484115 and then 2 stars. Let me just screenshot that thing here. Obviously, our customer success team is going to get in touch. Congratulations, you're going to get those funds onto your account. There's nothing you have to do. I mean, obviously, we would appreciate it if you share your success in social media. That's always great if you did that. But please be always careful. Don't get scammed. And yeah, thank you so much. Other than that, looking forward. See you all next week. Let's have a really, really, really good week. Focus on things we can control, prices, something we can't. So let's make the best of it. Fabio, thanks so much for all the insights. All the best, everyone. Have a good Wednesday, rest of the week. Thanks so much. And